Deputy Owen Murphy, 25 minutes.
Thank you, Chairman. Thank you, Mr. Forde. You're very welcome. Just to clarify, Mr. Forde, if I may, you were Managing Director of AIB in the Republic of Ireland from 2002 to February 2009. Did you have an opportunity to hear Mr. Gleeson's evidence this morning?
No, I didn't.
In the written statement he provided to us, he said that, under the heading Quality of the Business Model Setting Process, 4 of the 5 business divisions came through the crisis relatively intact. The exception was the largest division, namely Republic of Ireland. And then in his oral presentation, he said ROI brought the bank down. Would you like to comment on that?
I think that's substantially true. The weight of the loans that ultimately caused problems, property and construction loans, did originate in our division. So I have no quarrel with that.
Coming to your opening statement, just to get some clarification, you said that in January, February 2009, you were completely removed from discussions at executive management level and board level, and without objectives or direction in terms of a work agenda, and 9 months later you left the bank. Could you please clarify what happened here and why you think it happened?
In what respect, Deputy?
In terms of that move being made at that time.
Well, my understanding when it happened was that the Chief Executive, I think, thought that fresh eyes and fresh perspective on the division would be a helpful thing at that point in time. That I expected was his mindset, and I didn't have a quarrel with that. I was disappointed, clearly, to be stepping aside from a business that I had been intimately involved with for 7 years before that. But I understood his rationale. The position that I understood I was taking up, I thought, given in a way the difficulties in which the bank found itself at that stage, that its a perspective and strategy would be an interesting and a role in which I could make a contribution and in some sense help for the situation that I was part of creating. The role simply never materialised. I think the bank got into crisis ever more intensively from that point onwards. Whatever ambitions he had for that role to develop just never materialised. And
do you think that move that you made, do you think it was a result of a particular action on your part or connected to the performance of the bank in the Republic of Ireland under your tenure?
It wasn't offered to me in those terms, but I can't speak for the Chief Executive. I think that's a question for him. It wasn't put to me in those terms.
Okay, thank you. I'd like to move to just a few months prior to that, when you appeared in front of an Oireachtas Finance Committee in December 2008. And you said, with regard to the recapitalisation of banks, part of the difficulty in the debate is that banks are banded together as if we're all at the same. We are not. AIB has made it clear it does not believe it needs capital, and that additional capital will not do anything for the business for which I am responsible. And then in February, 2 months later, February 2009, there was a capital injection into the bank from the government. Can you please explain the difference between your statement and the actual subsequent action?
I can. I think you'll see in the documentation that we were given, there's a stress test that was done there on the property and construction portfolio in 2007. And that was done by the risk management function in the bank, by the most qualified people we had in the risk management discipline. And you'll see in that their downside scenario, their extreme case scenario, was a loss of 2 million of the bank's capital. Well, actually not of the bank's capital, loss of 2 million, which would substantially erode the profitability of the bank and might require, I suppose, its capital adequacy to be boosted, but this was the extreme view. So when I was asked in 2008, I was still leaning on that understanding of our portfolio. That was my view of the risk that attached to the business that I was responsible for. And I answered the question, and anything I would have said would have been informed by that perspective, which I now accept was wrong. But that's what guided those answers at the time.
Were you instructed to make that statement at the Finance Committee about AIB not requiring capital?
I wouldn't say I was instructed. I mean, I think there would have been discussion going on at the executive management team, and the issue of capital would have been under discussion, because at that time there was an expectation in the market, essentially, that we needed capital. And I think, again, I remember seeing some of the minutes here in the documents. I think the view of the finance team was that there were some steps we could take to improve our capital position, but not going so far as a capital issuance. So I was persuaded by that view, and I that's what informed. So I wouldn't say I was instructed. I would say I accepted the view of the finance team at that stage.
But was there a discussion at management level as to how to present the bank's position to the Oireachtas at the time?
No, I can't say that. No.
And then moving just 2 months later from you making that very express statement in a finance committee, 2 months after the guarantee, the bank does not need capital. It then requires a 3.5 billion injection from the government in a 2-month window.
Yeah. I think I make the point, I think, in my statement that my last act, if I can express it in those terms, as the MD of Division, was that the Chief Executive has asked me to do a very rigorous assessment of what the scale of loan losses could be. This was in late January, early February of 2009. And I did that at the time, and I did it. That was done in close collaboration with the Chief Credit Officer and the risk executives. And the product of that was, at that time, to suggest that the loan losses could be of the order of 2 to 3 billion. That was my last picture of the division before I, in a sense, stepped aside. Now, that would have not led to that order of capital requirement that subsequently came. Now, things deteriorated so quickly and so sharply after that, that from one month to another, the situation changed. So I can understand how, at that stage, I recall when that was being done, the worry and the concern from a credit point of view was that houses weren't selling. Sales of completed office developments had stopped. The worry was not so much about the fall in value as it was about the suspension of economic activity. At that stage, values were back, house values were back 25%. Clearly, from then to a period 12 months later, things changed very dramatically. So, if you'll forgive me, I think asking me whether an evaluation of the loan portfolio was done in February or done in April is very material, given what was happening. And the last one I saw was what was done in late January and February, and that was the product.
And that work you did talked about at maximum 3 billion loss on the loan book in the Republic of Ireland division. And you said that would have changed dramatically again 2 months subsequent to that.
I stepped out from there, but I'm saying I can understand how month to month thereafter, given the pace at which things deteriorated, the point at which you looked at that portfolio, you would get a different and more adverse result every second month, I think, if you looked at it.
Just to clarify then, your statement to the Oireachtas Committee in December 2008, as far as you're concerned, was true at the time?
Yes.
Okay.
Yes, unequivocally, yes.
Okay.
And the evaluation that I did in late January and February was, in my opinion, a proper, fair and honest evaluation at that stage.
Okay, thank you. I want to take you back then to your management of the increase in property lending in the Republic of Ireland prior to the 2008. The rate of increase in property lending in the AIB group was magnified in the Republic of Ireland division. And on exposure to property, property lending grew in the Republic of Ireland from 10.1 billion in 2004 to 33.3 billion in 2008. Can you explain this imbalance with other divisions in the AIB group? Why was it magnified? Why was it so much greater in ROI?
Because the heart of our franchise, we were Ireland's probably still are Ireland's biggest business bank. The core of AIB's franchise in the Irish market was with business customers, and the greater part of economic activity that was afoot at these times was in property and construction. So I think an added statistic for that period, Deputy, was that our market share wouldn't have changed during that period. So what happened was we kept pace with the level of activity in the market. We continued to service and support those customers through that time. Mistakenly, I now accept. But we didn't feel we were stepping more intensively into the market. We felt we were keeping pace with the requirements of our customers.
Two different CEOs during that period, 2004 to 2008. Did either of them express concerns with that magnification in property lending?
Um, there was a number of discussions. I don't recall specific. Well, I don't recall specific discussions with the CEOs, but I recall discussions at our group executive forum, and I recall a number of discussions at the board, where there would be considerable discussion about the weight of our property and construction lending. And I suppose particularly the fact that it was, and again I saw reference in the documents, it was in breach of some of the guidelines from the regulator. And there was a number of board discussions to specifically address that point. Were we comfortable with what we were doing in property construction? And I actually recall, I think when that stress test in 2007 was presented to the board, that was in response, I think, to a specific request from the regulator that the board would validate and confirm its comfort with AIB's property and construction exposure. And I suppose the board's response to that was to ask the risk function to do that evaluation that you've seen there and that stress test. And the output of that, mistaken I now accept, I think left them with a false sense of security and a false sense of comfort. So yes, I've answered that in a long-winded way. There was discussion. I wouldn't say there was concern, but the scale of our property and construction exposure featured frequently. But each time the board got to a point of comfort with it, and we continued.
You were in breach of the limits by, the limits were 250%, the limits you mentioned. And in 2006, you were at 260%. But by September 2008, you were at 390%. That's.
I can't. I'll take.
I can give you a reference to that if you'd like.
Yeah,
it's
I'll take your.
AIB beats.
We were in breach of them. I acknowledge that. Anyway,
but it was a significant breach. Would you not agree? 250 to 3.
Yes, I would. Yeah.
390. But you drew comfort from the fact that the board was happy with this.
Well, I don't say. I too drew comfort, and
because you were the managing director in the Republic of Ireland.
I too drew comfort, and I think when you'll see that, if I can just lay my hands on it, when you see the presentation that was made to the board, this was a time when there was a lot of discussion going on about BAL 2 and the manner in which loan portfolios should be measured and evaluated from the perspective of what capital was required to support them. And you'll see reference in this that certainly what was communicated to me, or was communicated to us, was that the regulator themselves recognised that this singular homogeneous limit was no longer appropriate. And what was now required, and that was consistent with BAL 2, was a segmentation of that portfolio and analysis of the different elements of it from a risk point of view. And that's the exercise, essentially, that the risk function presented. And that, you will see reference there, that the regulator was interested in that methodology themselves.
So just to confirm, from your point of view, the regulator was also considering changing the methodology
that's what I understood.
of calculation?
That's what I understood.
And you were in agreement that the methodology should be?
Yeah, in principle, it's right to say that one homogeneous limit for all property is perhaps not the best way forward. So I understood the logic of that. Perhaps the alternative that we were working with didn't prove itself too well, but in principle, I could see where they were going with that.
If I could move now to the reliance by the bank on interbank lending, securities, short-term commercial lending and wholesale funding. Were you aware of the extent of the tracker mortgage interest rate risk in AIB that you were taking on over that period? And was it ever discussed with the board?
No, I don't think we ever looked at it as an interest rate risk. Well, by that you might mean the basis risk.
Yes.
Okay. Yes, we were conscious of it, but at the time the view was that mortgages were going to be so preferentially treated under the new BAL 2 regulations that actually those margins could contract further, because these, as an asset, they were particularly favourably treated essentially under BAL 2 in a manner that perhaps in hindsight wasn't justified. And for that reason, again, the view was that those margins would continue to contract. So, as with other elements, we didn't see the risk in that.
I mean, that was just an accounting tool, though. I mean, more than 50% of your residential loan book was tracker mortgages.
Yeah.
I mean, in terms of the practice of having to lend at one rate and borrow at a higher rate, and the risks inherent in that.
Well, you had that risk anyway. I mean, even a conventional mortgage has the same risk attaching to it.
Do you think the bank understood those risks or the scale of those risks?
No, I don't think we did. No, I don't think we anticipated. Sorry, we did not anticipate the level of structural change that came about in the interbank funding markets. We had never anticipated a scenario where essentially you would have to borrow money at such premium in the marketplace. No, we had not anticipated that properly.
Okay. And why did the bank? Why was there a significant increase in the issuance of short-term commercial paper funding, given the short tenor and volatility in such instruments? When it comes to a credit crisis. I mean, if you look at, just to give you the figures, in the end of financial year 2004, AIB increased.
Yes.
That's correct. Yeah. Okay. Increased its commercial paper by 6.2 billion, a 300% increase year on year, to assist in funding balance sheet growth.
I'm not sure. Are you right in describing?
Sorry,
I can bring up a bit of evidence on this.
Yeah. Well, sorry. It's
okay, Chairman Nicola.
Mr. Forde, there was a significant increase in the issuance of short-term commercial paper funding in AIB when you were managing director, a 300% increase year on year. It's a risky thing to do for the reason we've just been discussing. In a credit crisis, when people then call in these issuances, or there's no lending on the interbank market, you then run into trouble in terms of your funding and liquidity if it's called upon. Were those risks appreciated by AIB at the time?
Well, in answer to your question more broadly, I'm not sure we understood the degree of funding risk, but I wouldn't attribute that to commercial paper. The issuance of commercial paper is a well-recognised means of improving your liquidity profile.
Why did it increase? Why did it expand?
Because it was one of those measures by which we were trying to improve essentially the construct of the balance sheet. By being able to issue commercial paper, you improve your liabilities, and that enhances your liquidity position. Mm-hmm. So that was a positive step. But if I take it in the context of the broader question you're asking, I'm not sure we fully understood. In fact, I am sure we didn't fully understand. We did not anticipate the scale of dysfunctionality that came later in the interbank markets. I accept that point and I acknowledge it. Commercial paper would have actually been a positive feature of the work that was done to try and improve our position on the issuance of it.
Okay. And to your knowledge, was there a practice of restructuring criticised loans, agreeing to moratoriums, interest-only, interest roll-up, extending terms and conditions in the period 2006 to 2008?
Sorry, Deputy, was there?
It's related to solvency.
Yeah. Sorry, we're moving into the solvency issue today. Restructuring criticised loans.
In the period?
2006 to 2008.
I think there's always a practice of restructuring criticised loans. I mean, one of the means by which you try and remedy a loan that is not functioning is to try to restructure it. So, yes, always, not just in that period, there's a practice of trying to restructure criticised loans. But the volume of criticised loans in the period of 06 to 08 would have been very few. So I'm not sure where your question is going, but it wouldn't have been material.
It began to increase quite quickly then.
In 08 it would have. Yes. Late 08 it would have.
And then what does that tell you then about the quality of the loans that were being given out then in the period prior?
Forgive me, it tells you the obvious, which is that your loan quality is deteriorating, which was obvious from the early part of 2008 when, as the economy began to slow, it was obvious that loan quality was deteriorating, and that was just one of the symptoms of it. Mm-hmm.
I want to take you back, if I might, just to your opening statement, just to clarify something then. Because you said in your opening statement, which I know you didn't get to read out in full, the first point of failure came with the collapse of economic activity and the manner in which it undermined repayment capacity. Just elaborate on that point for me, please. When did the problems in AIB actually begin?
Okay. Well, the market began to deteriorate in early 08. Now, what I mean by deteriorate is that essentially, well, forgive me, I'll just step back one step forward. If you're managing a property and construction portfolio, you lend for a significant period of time. You have to lend through a period in which land is purchased, in which houses are built, and the costs are incurred. before the revenue only comes at the end when houses begin to sell or the office, the commercial development that has been developed begins to sell. And the loan and the cash flows are predicated on that sale happening at a particular time. And from early 2008, it was obvious that activity in the market was beginning to slow. Houses were not selling in the way that had been expected. And what that begins to do then is it pushes out the revenues on which those loan cases are based. So from early 2008, it was obvious that there were some developers who were would not meet the cash flow expectations that we had. And I would describe the deterioration in the loan book through the course of 2008 as that dynamic. That's what was going on. And it wasn't until 2009, actually, that the concern of inadequate security values began to really manifest itself. It's only then that it became obvious that asset values were falling to a point that our security was going to be compromised.
In terms of in terms of AIB failing, its failures as an institution, as a bank, were prior to that, though. The AIB's failures weren't just because of a collapse in economic activity in the country.
No, forgive me. I was trying to describe why it is that the loan book was deteriorating. I've acknowledged that our failure goes back to the scale of property and construction lending that we had. I make no bones about that.
Clear from that point in your opening statement.
Sorry.
And then, in relation to the change in management, the change in CEOs while you were MD, would you like to comment? Was there a change in style or a change in direction for the bank between 2005 and 2006?
No, I can't say that there was. I can't say that there was. I think the level of growth in the market intensified in 2005 and 2006. So it seemed like the pace of activity was more frantic, if I can describe it in those terms, through 2005 and 2006. I can't say that there was a change in the culture of the bank. No. I probably would say, let me just amend that a small bit. I think there was a little more pressure from outside the bank for performance, because I think at that point other banks were going through a stellar performance period, and certainly I was more conscious of the pressures from analysts and shareholders to meet their expectations. So I would say it was different in that regard, but I can't say the internal culture changed.
But then other technical changes. Bank exposures needing Group Credit Committee approval went from 40 million to 75 million. End of 2005, beginning 2006. Was that from a change at CEO level?
No, it simply came about because of, I suppose, two things: the growth in the portfolio and the growth in the number of cases that exceeded the threshold that applied at the Divisional Credit Committee.
Okay. I want to just come back just finally to Mr. Gleeson's evidence earlier today. We're talking about the roll-up of interest in the ORI division, and when he was asked about the board went looking to find out exactly how much interest had been rolled up, and he said there was a bad piece of missing architecture because management weren't able to produce it. They had to go and look for it manually, and he said that this was an indefensible gap.
Yeah, I think that's fair. An indefensible gap at the level of portfolio management and understanding. In each of the individual cases, that would be well documented on the file. So yes, there was a gap in the inability to be able to pull that together as a complete picture. I accept that.
Did you understand that gap was there? Did you understand that people underneath you, in terms of managing their portfolios, weren't monitoring this?
No, that's not what I've said. People were monitoring it on a case-by-case basis. The gap was that from an overall portfolio management, we weren't readily able to present that picture. And I guess that only came into such sharp focus in late 2008, and then it became obvious that that was a piece of information that we needed a lot more, and needed to be able to access a lot more readily than we were able to do.
As it occurred, was it being reported to you?
No, I think it's... Can I just step back here for a second? If you take an individual property case, as I've said, if I lend money to somebody to purchase land, or if I lend money to somebody to develop residential housing, there's always going to be interest roll-up. There's no way of paying the interest There's no way until houses begins to sell or the complete. So there's interest roll-up endemic in every property loan.
That's one reason for interest roll-up.
Yeah.
But there are other reasons where someone's not able to meet their repayments.
Sorry, that would be fair. That would be fair later on. That became a feature, I think, I would say through 2009. And late 2008, there was some who were beginning, as I explained earlier on, when you asked me to explain the deterioration in the portfolio, it was for that reason, that we were beginning to encounter some cases where they simply couldn't pay their interest because those sales weren't materialising. Yes, that's the case, but I would distinguish those from the concept of interest roll-up more generally.
Did AIB distinguish?
We'll bring you back in at the end, Deputy. You'll have time, okay? Thank you.
Did we distinguished on a case-by-case basis. I've acknowledged that what we didn't have is an overall MIS that was able to present that to the board in the way that they would have wished.
Deputy Murphy.
Thank you, Chairman, and thank you, Mr. Forde. Mr. Forde, you were still on the board in September 2008. On the 26th of September, the board decided to pay an increased interim dividend amounting to 270 million. Did you agree with that dividend payment?
Yes.
Did you benefit from it?
I was a shareholder, so yeah, I would have benefited from it, I guess, yeah.
And did you reinvest in AIB shares?
At that point, yes, the dividend automatically got reinvested, I think, as part of the profit share. Yeah. Sorry, we would have. The reason I'm hesitant is I would have had an big established shareholding, and I would have got a dividend on that, some of which would have been invested automatically. I'm not sure if all of it was. I can't say that.
Do you remember people objecting to the issuance of that dividend?
Yes, there was quite a bit of discussion at the board about whether that was the right thing to do. I think there was different views. There was a conflicting view. One view held being that it was important at that point to demonstrate a confidence that the management felt that we were in a reasonably secure position from a capital viewpoint. There was another view with the idea that essentially we needed to conserve capital. And the view that won out was the one that we needed to make a strong statement to the market, and I was persuaded by that. Yes.
Optics. In terms of optics, that you were making a statement to the world market that you were sound.
Well, you could describe it that way now, yeah.
Thank you, Chair. I just wanted just a couple of brief questions then. The accounting standard IAS 39. Did you understand the flaw in that standard when it was introduced?
I had a view that it wasn't an appropriate formula.
Did you express that view to anyone?
Frequently enough. I think we had that discussion internally. That view was held by all the senior people in AIB, and it would have been a point of discussion with our external auditors, but I understood that they had to operate the system that prevailed.
Were you aware that the banks in Spain were ignoring the application of that accounting standard?
What?
And was there any discussion that you might follow the lead of the Spanish banks and ignore it yourself?
I think that was because the regulator had prescribed it in Spain. I don't think the regulator had made any such prescription here in Ireland.
And did your bank or the auditors discuss bringing this to the regulator's attention?
I didn't personally. I wouldn't be in. That would be the finance function that would be involved with the auditors. But certainly, I was party to discussions, many of them amongst the management team, where that view was the dominant prevailing view, and certainly would have been shared with the auditors. I don't know how pressed, in a sense, they were by the finance function to take it further.
Was there any discussion then of doing your own internal bookkeeping that wasn't for official accounts? That would,
Well, you couldn't do that. You have to meet the standards by which you're.
No, you meet these standards with your official accounts, of course, and with your auditors. But you yourself would take your own look using a different accounting standard to be safe.
But you couldn't do that. I mean, you either could make a provision or you couldn't. What IAS 39 prohibited you from doing was making provisions.
In terms of understanding what the potential provision might need to be under a different standard.
I had a strong view, as had the loan officers, that we would wish to have more provisions. Mm-hmm. But that was not possible.
But would you ever attempt to calculate what those wished for provisions might need to be?
Absolutely. Each time at year end, we would have discussion about, in an ideal scenario, how much more we would wish to put aside. Absolutely so, yes.
Was documentation kept on that?
No, I wouldn't have said so, no.
Okay.
In some sense, it was a bit of a futile exercise because the rules were the rules.
Do you remember how significant the discrepancies were between the wished for provisioning and the provisioning under the accounting standards?
I think discrepancies suggest that there's...
Discrepancies in
Sorry,
place.
it's different.
Yeah, I think that suggests wrong. I mean, what I'm trying to convey here is, when times are good, a banker's instinct is to put money aside. The rules were specifically designed to disallow you from putting money aside. So we always felt that, look, this isn't a clever formula. And with respect to the specifics, we would have been obviously of a much stronger mind to have a greater quantum aside in late 07, in 08, than would have been the case in 04, 05 and 06.
But the feeling that you couldn't do that was because the regulator had not permitted you to go outside of that accounting standard.
Well,
Sorry, you said that's why in Spain, that's why they were able to do it. Yeah.
We were very clear that the reason we couldn't do it was that the accounting protocols didn't allow us. You are right in that there was an instance where in Spain that had been set aside, I think, by the regulator, but no such action had been taken domestically.
Okay, thank you.